Hello, guys. I'm back to work now, so I don't really have the time to devote to my videos and my trading as I normally do. So typically, this time of year, I really start scaling back my trading, and basically, my weekend videos are going to be about it for, and unless I have weather related that I can be off work. But real quick, like on my videos here, basically looking absolutely horrible overnight. ES down 10 points. Nasdaq's down 43. Look at this. I want to point out the Nasdaq's leading the way lower. It was holding us up last week. Okay, so just keep that in mind. That is a leading indicator with the Nasdaq like that. You got your Dow. Dow's not doing quite as bad. 81 points. It's come back a little bit in the early morning session, and then our Russell is actually not doing nearly as bad because it got decimated last week with the financials. So it's not quite as bad so far earlier this morning. But I'm keeping a really close eye on some key indicators here, like our crude oil. We have this tight um, mini channel that crude oil has been going up in. I think this is going to break down today. Given a relative weakness in the global markets, I just do not. I don't think crude can hold these higher levels. It's going to be coming back in. We have like a mini inverted head and shoulders here on the crude. If you go on your weekly here, you'll see what I'm talking about. That was a mini, and we were trying to break out. And basically, I think we're going to be coming back in and possibly retesting this trend line on our crude oil space. So keep that in mind. It looks like this lower distribution on our crude oil is probably going to hold in there for a little bit longer, somewhere in this range down here for the crude. If we do see continued global weakness, now on the flip side, we've had some significant production cuts out of OPEC and the Saudis and the Russians. They've really cut back supply. So that's the contrarian here. Supply has already been slashed significantly, and but we have all the U.S. output that seems to be still at record levels. Okay, so far this session, we are right near overnight session highs going into the first of the week here. We got a little bit of responsive bid in the futures. So the fear and panic that's hit the Asia and the Europe markets in the overnight sessions seems to be improving. It looks like a little bit here. Same way with the Nasdaq. The relative weakness in the Nasdaq is something to be quite concerned with, in my opinion. And if you look here on your long time frame, as you can see, we're coming off. It came down to a support line on our Nasdaq in the overnight session here, and we found a little bit of responsive buying here. Came right down there, tagged it, found a little bit of responsive buying on our Nasdaq. Still, the Nasdaq is holding out much better than most of the rest of the markets. Okay, and it was this outright panic in the overnight session. So we'll see what happens here in relative to that. And as you can see on your Russell here, not looking too healthy for the Russell, but it does have a little bit of a more relative strength versus our some of our others. And we are already trying to get back into Friday's value area for the Russell. So really not the time to throw the baby out with the bathwater yet, but it was really looking pretty bad there in the Asia session, in the overnight session. So I just don't see outright total panic selling scenario, but the way China closed the session, if the U.S. markets continue to sell off today, you got to be very concerned about how China is setting up for tomorrow's session. Basically, this is a high volatility range for the Chinese session, China, and China's been really holding the global markets up with relatively tight ranges, trading ranges here as of late. So if China starts falling apart, and they even announced another stimulus over the weekend, and it sold off, and if it starts to break back down into this channel tomorrow, so this can get really bad real quick. So just keep that in mind. If the U.S. markets do manage to trade lower on the session, that it's likely to be a contagion for the Chinese markets going into tomorrow. Another one to watch, that's your Japanese markets. I went ahead and they've recovered along with the rest of the global markets, but have far. Japan's really in bad shape. And I've said for many videos that if this market really starts to fall apart, Japan's probably going to be one of the leading areas. And we had a gap down, and we're going to open right here near the channel lows of this uptrend. So just keep this in mind. We are this is the first time we are going to be testing the lows from the Christmas Eve lows for the Japanese markets of our primary channel. So, and we're going to be opening there in today's session. So, this is something to start keeping on your watch list, that this uptrend from December for even the Japanese markets could be in jeopardy. And keep in mind, Japan has the strongest quantitative easing of pretty much any country, right behind China. And they're doing this scenario going into tomorrow's session. So, very important that these markets get a substantial bid today. And look at this, the ES futures are even getting worse here. So, not good. And then your EWG, this is your Germany. And I'll double check it here in a minute, the live charts. But right through here, right here at value area low is where Germany is was set to open here a few minutes ago. And so if we start breaking that area, it could get really nasty. This is, you see that purple line right there? This is a responsive buy zone for Germany. So whenever you go into the opening session here, if Germany's holding firm, there's a decent chance we're going to see some a bounce into today's session. I just wanted to point that out. Germany is critical to hold here. I know we broke this channel, but this is a responsive buy zone for Germany, and you need to really keep that on your watch. And I get this off of this is my weekly value areas, and I get this purple line based off of this VPOC from the week of it's about 215, 216 that week. That's the volume point of control. And so this is, like I said, the weekly volume support area. And we have violated 2017 value area high for Germany. So, like I said, the German markets, keep in mind, German markets, France, and I think even Italy, all the markets are in contraction territory as of last week. So this can get much, much worse, signaling recession in the European markets. But this, like I said, there's a decent chance that we find some responsive buying from this point. And so far in the morning session, you can see we're kind of a smaller trading range right here for the German DAX. So just keep this in mind. Our MACD on the 5-minute here, we are getting a little positive divergence. So keep this in mind. You got to be extremely careful pushing your shorts, knowing that the German DAX, there's a potential that the German DAX could rally here. Oh. True sell-offs in the marketplace. One key critical thing that I look for a significant sell-off, I want to see my high-yield bonds leading to the downside, creating a potential liquidity issue. And with the talks out of the Fed chairman and the Fed and stuff, they're not really talking about tightening up liquidity in the markets, and our high-yield bonds are not giving that same signal. So I just want everybody to keep this in mind that, we're probably due for a correction or a pullback, for some profit taking at these levels, but our high yield bonds are not signaling full on panic mode. Now, if you go on your daily time frame, even your high yields, see here, that's the daily. Let me go on a weekly. Weekly. 1 second here. Yeah, on our weekly time frame here, there is room for the high yield bonds to come back down further. But even anywhere in this zone is just the consolidation zone for high yield bonds. So just keep that in mind. There's not really any type of absolute terror panic in government or in U.S. corporate debt. And that's a very bullish sign for the global markets, in my opinion. So, but I do think 85, 70 area is very good chance we're going to be coming back down into that this week. Just a little bit of risk off because of all the global turmoil. And I'm just going to keep the video short here. And basically, one key thing that I'm getting from this recent sell-off in the markets, it does seem to be more of a panic profit-taking scenario than a full-on let's cover our tails and prepare for a big multi-month correction like we had back in this the latter part of last year. Basically, what's telling me that the later date VIX option contracts, they are lagging and on percent gains, and the front dated VIX contracts are the ones that are actually catching the bid up. So this whole yield curve thing, analysts have been talking about how it was going to destroy the market for years. And now that it's finally happened, yeah, there could be a lot more panic going on here in the markets because of finally we're getting to the point where, the inversion in the yield curve is scary. But the VIX futures at this point in time are not suggesting a full-on crash in the markets, despite the inversion in the yield curve. And we've had this inversion for quite some time. It's just the inversion's getting much worse than it has been in recent times. So just keep that in mind. And if you ever want to check the end-of-day rate inversion, you just go to the U.S. Department of Treasury and Treasury yield curves. Google it, and it'll show you. And you just scroll down here real quick, and this updates daily. And basically, once the 2-year, the really scary part is once the 2-year, the 2.31, once that goes over the 10-year, that's whenever we got outright recession or a major recession signal. And yes, we've got some fear in the markets and heightened fear, but we've not actually technically went into bearish inversion mode yet, okay? So, and we are in a sustained uptrend in the markets. So just keep this in mind. Dips still are buyable, in my opinion. And do keep in mind that we have a void for, and the big fund managers realize this, there's a major void for buybacks in the U.S. So this is causing a lot more illiquid markets than you typically have been seeing recently. So that's another reason if the bears wanted to take control of the markets, at least even for the short term, because of that less supporting volume coming into the markets, they can actually drive prices lower over this next week than they typically otherwise could, in my opinion. So just keep that in mind that there's potentially far less buying potential this week and more ammunition for the bears to trend their way for at least a short-term correction. Okay, and but it's really hard to continue to fight all this stimulus out of China and then the huge buybacks here in the States. And just try to find your areas. If you're wanting to swing, I'd still suggest swinging to the long side when you find good levels to enter. Okay, thanks a lot, and I will probably see you next week. I'll try to do a little bit of trading later this week. Please, if you like the video, like it, leave comments and feedback and news and stuff. Like I said, I'm away and stuff, so please, if you guys can see some headlines or stuff like that, I'd really appreciate you tweeting them to me, and uh, you know, so I can keep up with the markets just like the rest of you guys. Good luck and good trading.